So here is the truth. I still remember the first stock I ever bought. I had no idea what I was doing. Just buy something and hope it goes up right. But in the last 5 years, I've learned a lot and lost a lot. I've tried different strategies, day trading, swing trading, futures, option, forex. I've tested different tools. I've seen what works and what completely falls apart. And every time I thought I figured it out, the market proved me wrong. And that is why I'm starting this challenge. I will take just $1,000. Every single day, I will share exactly which trades I take and why. And if you want to follow along in that journey, please make sure you subscribe. But before we dive into the trades, in this video, I will share with you exactly how I plan to approach this challenge. I will break down the strategies and the setups I rely on, when they work and when they fail. I will tell you the exact rules I follow before I even take a trade, the tools and the scanners I use every single day, how I manage risk, position size, and how I track my results. And most importantly, the mindset I need to stick to. Nothing will be hidden, no excuses. The first thing I want to make clear, it is the stock selection criteria. So trading patterns, they are no strategies. Do you have to trade it on the daily chart, a 1 minute chart, in what type of circumstances, with what type of instruments, with what type of stocks? So a lot of people will test their hypothetical trading patterns, and there are thousands of patterns in the market, but just a pattern is not a setup. Certain patterns will work with certain criteria, with certain risk to reward ratios, and when everything fits into place, then you have a solid setup. I will go through my full setup, but the first one is obviously, how do we select stocks? There are plenty of great scanners, but I will share with you the free ones. One of the scanners I use is just on StockTwits. So we go to stocktwits.com/sentiment, and the top 10 stocks are the most interesting for me. Now, very recently, like 2 days ago, they decided, hey, you have to pay to see the top 10. So that is a bit unfortunate, but if you want to see the top 10 for free, just look right here. These are the exact same tickers that you have to pay for. So instead, now you cannot see them here anymore. You have to look a bit higher. These are potential ideas, but it doesn't mean that something pops up in my scanner and that means, ooh, I can trade that. Absolutely not. That is a good way to lose a bunch of money by just trading what's on your scanner without fitting the further requirements of your setups. Now, the second place I go to seek for trade ideas is YouTube. On YouTube, I just type in Zendo Live Scanner. And obviously the market is closed today, so there's not a live stream, but on market days, we have here a beautiful live stream of all the momentum scanners. Now I can click as an example on this of a scanner of 6 days ago, and we see here all the information, the gaps, this right here, pre-market plus high momentum, that is where I have the most interest in. The top gappers with volume, those can also be very interesting, but there's one particular reason why I'm not looking at those, is because I have a similar scanner within my own broker, and then it's way more convenient to do that. So the third place where I look for trade ideas is no other than my own broker. So here, my broker in the right corner, I have a scanner. So what this scanner is looking for is very similar as a live stream on YouTube. It is which stock gapped up more than, I think my requirements is which stock gapped up more than 3% and has more than 5 million in volume. Those are my current requirements. So now you have a list of potential stocks to trade. So then my next step is looking at the pre-market price action. Is the pre-market interesting or not? If it's not interesting, then I leave the stock alone. If it's interesting, then we can do some further research. So later, when I will explain the setup criteria, then you will understand when is a stock good to trade and when is it not. So let's say right now we have an interesting pre-market price action. Then I will be looking at the catalyst. Now, there are actually two places where I look for a catalyst. The first one is just on Webull. So one place I do that is just here on the side of Webull. But to be honest, I have another secret that I use, and that is not other than ChatGPT. So I have here I can give GPT any ticker, and then it will give me the most essential information that I need. Now let me go into some past conversations of this GPT. This is a good example. So it will give me the SIC filings, the institutional holdings, the new sentiment, the next earnings date. So based on my criteria, which setup should I be playing? Should I play the Volcano setup, the Hammer setup, the Floor Break, or the Wave Rider? And it says why, and it recommends me. I want to make clear, it's still ChatGPT. It's not some magical tool that spits out the right facts for my setup. No, I still have to do my own elaboration, my own research. But the great thing about it is either I agree with GPT and it confirms my bias, or I disagree with GPT, but then I have to argue, why do I disagree with something that GPT says? As a result, I have to think twice over every setup I do, and that's already part of my preparation. So here you can see I give it another ticker, I get the information. In this case, it recommends me the Hammer setup, and in this case, it recommends me the Hammer setup. Very useful stuff. Now, what else do? I have also another that is a catalyst classifier. So I give GPT a ticker. It searches for the latest catalyst and what are the odds that this catalyst will reverse. So when GPT gives me low reversal risk, I will not be shorting that stock. When GPT gives me high reversal risk, I will be probably looking for shorts. And when it's mid as this, then I will just trust the price action. As simple as that. And again, is this golden? No. Does it work all the time? Definitely not. But it gives you a deeper insight as I'm preparing for my stocks. Now, and then we have the third GPT. This one I just use for my trade planning. So whenever I do my trade plan, I just say, hey, let's get started today. So, all right, let's get started today. We have everything set up to build your pre-market plan or do your post-market review. Depending on what you need, I have the setup and matrix playbook already loaded, my main setup ideas, and then usually I'm preparing the watch list with this particular GPT. And then when the trading session is over, I come back and I review everything. And then it gives me a score on every trade I did. This score is purely based on execution and not based on P&L. So I sent this GPT a screenshot and then it comes back with, you trade this good, you trade this bad, and this is why. For me, those scores are very reassuring because a big problem is if you just focus on your P&L, and then your mind starts to work in a certain way, you have to chase that green, you have to chase those profits, you have to go for those profits. But if you take the profit factor away and say like, hey, no, we have to focus on clean execution. Did I trade clean? Did I follow my edge? Because it's very possible that you have tremendous winning days, but you're just gambling, or you have losing days, but you're clearly following your strategies. So it's important to follow your edge and not just follow the money. And that is where this GPT keeps me grounded. So what I do is I literally press Windows H key and I just tell what my plan is, why I'm trading this stock, how I will execute it, what do I want to see. GPT is summarizing what I said, and it gives me also some scenario-based question. Okay, what will I do in this scenario? What will I do in that scenario? I don't always answer those, especially if you're preparing for your trade. Is those scenarios preparation is very useful, so you will not go into unforeseen territory. When you're ready to execute, then when that situation comes, you can go. So here we come to the matrix of every stock I mentioned this day, what my possible setups are, what the catalyst is, and what my plan is. Later, I sent a screenshot and how I traded that particular ticker. What were the mistakes I made? What is a score and what is the day score? So when this GPT gives you a trade score above 80, that means you're profitable. When you are above 90, then you're excellent. And when you're below 80, well, you truly got some work to do. So when I look at my scores here, so from every trade I do, I have the setup, the notes, and the trade score. And this is a purely execution-based journal. I have another journal where I track how good are my setups performing. I can trade a poor setup perfectly. That's not a great idea. This one truly tracks how good am I trading as a trader and not how well are my setups working. Because if I cannot trade great, then there's no point in having the best setups. If you cannot execute them, well, then there's a real problem. So if we just look at my day score, then we can see that I'm not significantly above 80. Like, I have some good days, 95, but the day before very poorly, 42, that's unacceptable. 81, that's good. 76, 63, unacceptable. 85, okay. So in that way, I can keep track on how well am I executing. As you clearly can see, I am not trading perfectly. Look at this, even in the 2nd of July, my mistakes. I traded things that were not even my setups. I had revenge trade. I was ignoring the price action. I was over trading. 1st of July, for this ticker, I did not have a clear plan. So I purposefully track everything. So I know what exactly needs working on. I focus on what is important. And what is important is how well you trade. That's the only thing that matters. Not if you made money or lost money, it is how well did you trade. You cannot control how much money you make in a market, you cannot. But you can control how good you trade. And if you trade good, then the money will follow. Let's go to my matrix. So these are my setups, and I will truly get into the setup criteria of each and every one of them. But here for the Wave Rider, I have discontinued this setup because in the last 6 months, it gives me an average of a 0.4 hour return, and I don't trade the setup that often. And when I trade it, I don't trade it that great. So it's better to focus on the things you're actually good in. The floor setup gives me on average 2.5 R return daily. Filters, this one gives me, is a hammer, this gives me 2R return. And with the Volcano setup, I get on average 1.8 R return. Now, what is R exactly? R is just nothing more than how much are you willing to risk. But what is the risk exactly? Now, for trading, the most common practice is to risk anywhere between 1 to 3% of your account size. So that means if you have a $1,000 account, which I will do in this challenge, a $1,000 account, 1 to 3% is $10 to $30 risk for each trade. So this is a maximum I can lose for every single trade. So 1 hour, one time my risk, and my risk comes to $10 to $30. Now, obviously, if you have a bigger account, let's say 10,000 to 100,000, well, the 1% will just stay the same. Then we will risk $100 to $300 for each trade. Obviously, when $1,000 is growing, the risk will also reflect that and be increasing. Now, what does it mean for the setups when I describe how much does a setup make? So then the question is, what does it mean if my setup gets a return of 2R? Now, in this case, 2R is 2 times my risk. So 2R will then, let's be conservative, will be then translating into 2%, which will be translating for a $1,000 account into $20 on average a day. And that's for that setup. So that also means instead of risking 1% a trade, I risk 2% a trade. Then 2R
means 4%, and that 4% will then translate into $40 on average a day. That's basically what R means. Now that we can go back to how do we calculate the position size for a trade. So how much should your position be? And I use actually one indicator for that. For my position size, I use ATR. So if you look at the stocks I traded last week, there is always a number here. With every screenshot we'll see, here's a number, and that number is the ATR. Now the ATR is actually quite simple. That means how much does every candle we see here on the chart, how much does each and every candle move? My risk usually is the size of one candle. So if one candle moves on average, here is it 88 cents, then my position size should reflect 88 cents. So I instantly calculate my share size based on the value of the ATR. The ATR is nothing more than an average movement of a candle. So then the question is, how much shares should I buy based on ATR? Now that is actually quite simple to do. So all you need to do is R divided by ATR, and that will be your share size. So how many shares should you buy? Then you divide how much are you willing to risk for each trade, let's say $10. For the sake of example, how much is your ATR? Let's say 0.1. That means we have to buy 100 shares. If you have a different risk size or you have a different ATR, obviously you will have to buy a different amount of shares. So let's say you want to risk $50 on a trade and the ATR is 0.25. Then you have to buy 200 shares. That is quite simple. Obviously, I'm not calculating that instantly. I have a few hotkeys that instantly give me the right share size. So I have a hotkey for 0.1 ATR, a hotkey for 0.2, a hotkey for 0.3, a hotkey for 0.4, and a hotkey for 0.5. Based on that, I can instantly select the share size I want based on the ATR I see on my chart. When I see, for example, an ATR, let's say of 0.5, that also means I just have to double the ATR of 0.1. Same again, and 20. So if I have an ATR of 0.25, double this size, and then I get my exact share size. And why is that? Because my stop loss is 1 ATR below my entry. This is for me just a simple rule. How can I make fast sizing decisions? Here is a 34% win rate. For the hammer setup, we have in the lot. These are all numbers from the last 6 months. 49% win rate, floor break, win rate of 53. Okay, now, but you probably are already very well aware that win rate doesn't mean anything. It's how much are you losing when you're wrong and how much are you winning when you're right. And that proportion is important. From this setup, I can have a win rate of 34% and still be profitable with this setup because I win so much more compared to when I lose. Let's go to the playbook and show you the exact rules I live by. So the playbook is I trade individual movers. I want stocks that move with their own catalyst, not due to market-wide events. I would say this speaks for itself. I want to have a stock that moves individual of the market. So when a lot of people goes to a particular stock, when there is that individual mover, it becomes more predictable. That's why you often see day traders trade every day similar stocks to each other. So here, the next one here is clean structure, clean intent, volume confirms everything. I will show you later exactly how I can see volume on my chart. You come prepared to the market. It is so much easier to trade well. When I start to improvise, when I start to compensate, when I start to looking for new tickers, that is often where I dig a deeper hole for myself. Now, there is one exception to this rule, and that is when there's a small cap mover that I couldn't plan for, and then I will jump in as well, but it's only in one very specific requirement, and that is only for a clean A+ Volcano setup. No worries, I will tell you later exactly what the Volcano setup is. But what is important to notice, small cap stocks trade a little bit differently than large cap stocks. I
wait for more confirmation than I do in small cap stocks. Small caps, I truly have to look at the level 2. How is the level 2 trading and respond on the level 2. With large cap stocks, I can wait until the volume. I have a little bit more room to wait whenever the volume confirms. So I start preparing 8 o'clock market time. Then I will look through my scanners and start my trading preparation. As simple as that. And I stop trading at 11 o'clock market time if I see clean setups forming, and then I tend to give myself a grace hour until 12, but nothing afterwards. And that's usually just because my discipline starts to fade away. And the market tends to get more choppier later in the day. So when my discipline goes down and I'm already tired, and often when I trade longer, it's because I want something back from the market and not because I'm trading good. And I just give myself a clear time-bound rule. At 11 I stop, and that gives me 3 hours of clear focused trading time, and it is perfect. Okay, here, no trading after 12 unless I have a position I'm managing or there's an A+ monster forming that I followed all morning. Okay, 1 minute pre-mental planning. Before each trade I ask, if I lose this trade, will I regret how I took it? A great mantra. When I start to feel FOMO, I think to myself, okay, now I take this trade and I lost it. Was it then still a good trade? And if I can say yes, then it's like, gotta get in. I have to get in there. But when it's no is the answer, and I know I take this trade and later I have to review it and then I have to write down, oh, I did not follow all the rules, it's often a bad trade. As simple as that. Am I following a plan I'm more forced to move, or would I still take this if I was already green on the day? So I also have a red flag checklist. When auto board, I have to abort my setups if any of these things are true. When there's weak volume on a breakout, when there's no clean base, when there's mixed volume or absorption of a breakout, no catalyst or only market related catalyst. The setup is undefined or based on feel, choppy range after 11 unless predefined setup. Okay, now we have here the A+ tracker criteria. These are these conditions. Tracks whether a trade meets A+, preconditions, strong individual catalyst, clean daily with room, no backholder zones, a clear base, breakout with volume and expansions. Wow. I will get into that later, what it is, when I can show examples of each setup I trade. It's a volcano setup. It is just a breakout from a tight base and works on small and large caps. This is an IPO, but here we have a resistance zone at, what was it? Is it at the 74 level? Here at the 74 we have here this resistance zone, and we have it again here. We are rejecting there, and then relative volume, we see this volume trending up. Yes, this is what I'm looking for. So we have here a resistance on the daily chart, and here we are getting here. Yes, here, this is a perfect example. You can clearly see here pre-market, we are forming this absolute clean base. So we're forming that clean resistance, and we are also trending up against that resistance, and that forms that clean base for the volcano. Here again with SOXL, you see here, these resistance areas, and that is the clean base. That's the idea of the volcano setup. I'm showing you now the price action. Again, here we have here this daily high, this rejection here, and then what we want to see is a rejection of the price on a particular level multiple times. That's a clean base. The price rejects the candle at least 2 times. So I want to see a rejection. Now we have here rejection here. So a rejection at the 11. That is a clean base. This is a good example. The price is rejecting here. Here even 1 time, 2 times. Here bunch of times. So we see here I have 2 volume indicators, which is better volume and relative volume. Now we see that relative volume is trending up. That means, hey, the party, we are having a great party. And so we are getting into the base, and volume is increasing in that base. So we already see this, it gives me this blue higher bar. So here again we have this rejection there on the daily chart, and we see here on this daily high, we see a better volume is creeping higher, and not a blue bar, but volume was creeping by higher, and I entered that trade. I showed you before, breakout happens with a sloping relative volume. So my
That's a line, that's a relative volume line, a full body candle and a strong follow through. And if you can't read level 2, this is the exact thing I want to see. This is exactly right for the large cap stocks. It's a timing setup, power move triggered by accumulation burst. So what is this setup not? A wick break without a prior base test. A setup based only on pre-market highs must be tested intraday. Yeah, so what I want to see is when you have this clear resistance pre-market, I want to see that level respected. So therefore I want to see that it's tested also in the intraday session. A chop near view up with no confirmation, fake breakout, wick and fake. That it's also not a breakout with no body or a weak volume bar. Anything that wasn't part of the pre-market plan for large caps. Because the way you analyze trades, so we have to start from the daily chart. Are there resistance levels on the daily chart or not? If there's no resistance on the daily chart, then the price has plenty of room to grow. Then your trade is more likely to succeed. Obviously, if you truly want to know how to analyze these daily charts or have any other specific questions, I will dive deeper into that. And then pre-market, I want to have a nice gap up where it has that clear resistance level where I can find a breakout of. I can send you all this information, link below. Keep in mind, this is my playbook. Take what you need, leave out what you don't need. Okay, then for the catalyst fit, I want to just basically simply, I want to just have to have a strong catalyst, and I have my GPT who's helping me for this catalyst fit. Again, for the volume behavior, I want to see with this breakout, when it breaks out of that clean base, bam! I want to see it shoot up, as simple as that. And we have here the entry triggers for the small caps and the large caps are a little bit different. For the small caps, I look at level 2 and then I sometimes am too early jumping the gun. For the large caps, I tend to wait for more confirmation when the volume is clearly surging because they move slower, and then you can truly wait for that confirmation. For the large caps, I'm also more likely when it fails to re-enter, because sometimes then it gets tested. It tests view up again and a reason to re-enter. And then we have also some abort conditions. Now, for the sizing, the default risk is 1R is basically one risk. So my risk for this challenge, I will use anywhere between 1 and 3% per trade. When I start with that $1,000, I will risk $10 to $30. Very clean and simple. I will not risk more than that because I want to save my portfolio. For this particular setup, my win rate is just 34%. I truly need to live to survive another day. Now, my exit strategy is actually quite interesting. I will have my first take profit at 4R. I don't do it based on the chart because I just look at the chart and I see, do I have enough room to get to my TP? And if I have enough room, at 4R, I take 50% of the table. And if it then gives me another 10R, so meaning in real numbers, if you risk $10, then at $40, I take $20 off the table. Then I wait until it goes to $100 and then I take 50 off the table. That is it very simply. I have calculated if I would take 100% of the table at 4R, I would make more money. The reason why I'm not doing it, because then I would miss some very big moves. And I know in the long term, taking 100% off at 4R would give me more profit. I still prefer this approach because it gives me more peace. So I'm willing to trade a bit more money for peace of mind. For the rest of the setups, I will go faster. If you want me to dive into actual detail, let me know what you want to see, and then during the weeks I will be recording every single trade I do, and I can show you on the exact charts how I trade these setups and that I don't have to read out of Notion. This is basically a failed volcano setup. So when the breakout clearly fails and there's a daily resistance level and the breakout clearly fails and then it sells off, that is my hammer setup. Here's a perfect example. We have here this daily on SBAT, he have here this clear daily resistance,
So first I did this Volcano setup pre-market. I thought because the overall market was very bullish, so I entered here long, then immediately got sold off. A bit of my mistake was I was a bit too late on the short side. Should have switched my buy sooner, but I didn't, so I was a bit late to the party, but I still sold it short, and well, it got nicely sold off. And this is exactly my hammer setup, because here we have this daily resistance. We gapped up, so then I was expecting this move down, but my entries were, I will show you exactly how I do it on some live setups and why I enter and exit those ideas. So gaps up or down into key resistance, exactly. Attempted breakout fails clearly. Entry is not a guess, it's a reaction on failed strength. So it's basically the bulls and the bears are fighting. The bulls and the bears are fighting. The bears win, join the bears. Just join the winning team. That's basically it. The Volcano setup is I decide to join the winning team, and the winning team is going upwards, so I'm going upwards. And the hammer setup is then, oh, the bulls and the bears are fighting, and bam, the bears win, I join the bears. Just join the winning team. Now, where did I lose the most money in the past? It is trading on places where the bulls and the bears weren't even fighting. Stay away from that. Trade less but better. Two main behaviors. We have a kangaroo slam, spike into resistance, and instant rejection. So kangaroo candle is very clearly, so you have this candle and has a long tail. So here we see this clear wick. So a small body and a long wick. That's just a kangaroo tail. Or second criteria is a weak higher high fails above resistance on low volume. This is a bit of a harder entry. This kangaroo slam is a super easy entry. It's super clean. This a higher high into resistance on lower volume. That means the price is really exhausted and ready to reverse. It's quite a challenging entry, and I don't do this entry so often. So, okay, what is it not? It's not an early short into strength or volume. It is not a random overextension fade without volume, not random overextension or fade without the level. It's not a feedback kind. It's also not guessing where the top is without confirmation, because guessing the top, I'm not good in that. And it's also definitely not a trending chart. Now here are my daily chart requirements. We want to see a clear, visible daily intraday resistance level, ideally overhead back holder zones and previous highs. So this is a good example. You see here this long wicks got sold off. So this is a clear indication of a back holder chart. If you see plenty of those things, that means all these gaps have been sold off. And I want to see weakness for this setup. Pre-market behavior, when I see significant gap up, gap down, preferably as a catalyst. So here we have my entry triggers. Now for that, subscribe to the channel, because then I will truly go it live. Now I'm just reading it off my screen, but it's better to show you how I execute it rather than tell you how it's done. And this is basically the reversal of a Volcano setup, but a floor break setup. So we have to see the exact same requirements, but this time it is just at the short side. And apparently I'm so more profitable in the floor break setup because I'm more selective when I decide to do these setups. So I give you the most requirements for the Volcano setup, but it's, to be honest, the place where I am the least critical. So what we want to see with a floor break setup, but I will show you my setup. This was forming this base around the 36 level, broke down, and then it broke down again. So I added in that position, and then I took here down off the table. The setup here is very clear to see. I tried to put the most useful information at the shortest amount of time but from Monday, I will be trading every day. I will share with you the wins, the losses, the mistakes, everything about my setups, how I find the stocks, how I trade the stocks. And if there's any questions, if there's anything that's unclear, I will respond to every single comment. So let's get ready and let's get trading Monday. Oh yeah, and if you want all these documents, everything, links below. I will share with you anything. These documents, the GPTs I use, whatever you want, I will give you all my resources for free. Come on, links below.